Hey there, it's Brian Powers over at RE/MAX First. Want to talk to you about interest rates now that 5% interest rates have officially arrived. It's a big topic. A lot of people are wondering what we're expecting to see from the real estate market going forward with higher rates, since it's been so long since we've had 5% interest rates to deal with. It's a new thing for a lot of people. So just want to share my thoughts with you and kind of go through what we're seeing in the market and what we're expecting going forward in an era of higher interest rates. So the first thing I always try to tell people when something like this happens is just take a step back, take a deep breath, and relax. This was not unexpected. We've been on this path for quite some time. The Federal Reserve has made it very, very clear for the last several years that they really wanted to increase rates, to slow down spending, to slow down inflation. And we knew that when they did start raising those rates, it was going to eventually make its way into the mortgage interest rate market, which it has. So this was not a shocker. We've been expecting this. And the bottom line is the fundamentals of the real estate market, in spite of rates having gone up, the fundamentals of the real estate market really do remain strong and are in a good, healthy place. Another thing I want you to keep in mind is just some historical perspective. Take a look at a 30 or 40-year trend chart of mortgage interest rates. 2 or 3% mortgage interest rates never have been, nor never was going to be the normal. It was a once in a generation opportunity to get mortgage interest rates that low. It never has been a normal rate in the mortgage market. 5-6% mortgage rates have been the normal, not 2 or 3%. So the good news is, even at 5 to 6%, which is the normal interest rates that people have paid over time, even at 5 or 6%, housing remains affordable for most people. Speaking of affordability, the good news is housing remains incredibly affordable for the majority of home buyers, even when rates go up. Most home buyers actually qualify for significantly more than they're looking to spend. And for most home buyers out there, in our experience, a rise in interest rates, while it will result in having to pay a couple $100 more a month on your mortgage payment, is not going to stop them from buying a home. If you want to buy a bigger home in a better neighborhood, in a different school district, or closer to family, those things are all way more important than a rise in interest rates. So affordability remains high, and we're not expecting a little bit of a higher payment to have a significant impact on people's ability or willingness to buy a home. Another positive development in the market is, even though rates have gone up, buying a home remains a better alternative for most people from a monthly payment standpoint than renting a home. Even at 5 or 6% mortgage rates, your payment, by and large, is almost always going to be lower than if you were renting that same home in the market. So even though rates have gone up, buying will remain a better alternative than renting for most people, which will keep a lot of buyer demand in the market, which will keep the real estate market pushing forward even in an era of higher interest rates. So what's next? Well, if you read or listened to our 2022 real estate market forecast back at the beginning of the year, we expected these rate hikes. They were anticipated. We expected rates to be in that 5% range by the end of the year. The only real surprise here is it happened a lot sooner than we were expecting. We expected it to gradually go up throughout the course of the year, and by the fourth quarter, hit that 5%. It kind of came on much quicker. A lot of uncertainty out there, a lot of global issues going on in the world right now that's caused some chaos in the financial markets that obviously nobody was expecting, has kind of brought this stuff to the forefront quicker, but it's not unexpected. So we expected 5% interest rates, and we expected home values to go up this year, but at a slower pace than in years past. Both those assumptions still hold true. We're still expecting both of those things to happen throughout the course of the year. So really not any really big surprise here, and that's why I think the market, in spite of higher interest rates, is going to stay stable throughout the year. And one little bonus that we actually might see is, while we expect most home buyers to not be affected greatly by the increase in rates in terms of still wanting to buy a home, it may push some buyers out of the market, or cause some buyers to take a step back, and that may cool down the bidding war. So if you're a buyer who's been really just frustrated with the fact that you go out and look at a house, you make an offer, and you lose out time after time, maybe that will go away a little bit, and it might be a little more realistic for most home buyers to buy a home this year. So I hope that helped kind of bring you up to speed on what we're seeing out there with mortgage interest rates and how we're expecting it to impact the market going forward. If you have any questions at all, please reach out. If you're a home seller getting ready to sell your home this spring or summer and you want to know how higher rates are going to impact your ability to sell your home, reach out. We're already thinking through that and looking at how we're going to adjust our marketing to respond to higher rates. We can talk you through that and answer your questions. If you're a home buyer getting ready to buy a home this year and you're a little kind of, concerned about rates having gone up and how that will impact your ability to buy a home, please reach out. I've got some really, really good mortgage lenders that I partner up with that we can get you in touch with and kind of walk you through all the different scenarios to make sure you're comfortable with where you're headed purchasing a home. Keep in touch and let me know how I can help out.